All right, let's talk about Sidus Space. This is a company with a stock price you could literally buy with pocket change, but its ambitions, they're completely out of this world. It's really the new space race in a nutshell. You've got these tiny players chasing absolutely enormous markets. So, the big question is, can this dream actually take flight?
So what's their big idea? Well, Sidus is trying to sell something they call space as a service. The easiest way to wrap your head around it is to think of it like cloud computing, but for, space. Instead of spending a fortune to build and launch your very own satellite, you can just rent a spot on one of theirs. It's a pretty simple concept, but one that could open up space to a whole lot more people.
And the market they're going after is just huge. We're talking about the whole ecosystem up there in low Earth orbit, or LEO, for data and communications. The potential value is sitting at around $200 billion. That's the sandbox they want to play in.
Okay, now hold that massive number in your head for a second. Because for all that ambition, Sidus Space's actual revenue over the last year was only about $3.6 million. And that right there, that gigantic gap between the dream and the reality, well, that's pretty much the whole story. So what does Sidus Space actually do? At its core, it's what's known as a micro-cap aerospace company. All that really means is that it's a very, very small, publicly traded company. You can just think of it as a tiny fish in a truly vast ocean trying to carve out its own little corner. Their business model has a few key parts. It all starts with designing and building their own satellites. Then, they use those satellites to collect a ton of data. But here's the really cool part, the secret sauce. They use onboard AI to analyze that data while it's still in space. And finally, they're going after defense and government contracts, which, let's be honest, is the bread and butter for this entire industry. Okay, so that's what they do. Now let's dive into the bull case, the optimistic view. If you're buying into a company like Sidus, you're not just buying a stock, you're buying into a really exciting dream about where the whole space economy is going. This slide really breaks down their whole game plan. Pillar 1 is manufacturing the satellites. Pillar 2 is that renting space idea. They call it hosted payloads. But the real destination, the end game, is Pillar 3, data as a service. Think about it for a second. Instead of beaming down these massive raw data files, their AI chews on it in orbit and just sends down the finished insights. That's where the real potential for high-margin, recurring revenue is hiding.
So you can see why the bulls are excited, right? You've got this massive industry tailwind pushing them forward. Sidus is combining satellites, AI, and data in a really interesting way. They're targeting those stable government contracts. And let me just say, this is a huge if, they actually manage to pull this off, the upside could be absolutely astronomical.
Which, of course, brings us to the big, flashing $2 question. If the dream is so compelling, why is the stock trading for pocket change? And this is where the story takes a sharp turn, from the sky right down to the spreadsheet. So let's flip the coin and look at the bear case. This is where we have to leave the grand vision behind for a minute and get really grounded in the company's financial reality. And right away, this chart shows you the first major red flag. We're looking at revenue here, and despite all this talk of growth and potential, it has actually declined from the previous year. For a company in what's supposed to be a booming industry, that is not a trend you want to see. And this table here, it paints an even clearer and, frankly, scarier picture. Just look at these numbers. On only $3.6 million in revenue, they lost nearly $30 million. Now, you might see that $43 million in cash and think, hey, that's a pretty good cushion. But then you have to look at the source, equity raises. That means they're not earning the cash. They're raising it by selling off more and more pieces of the company. That dilutes the value for every single person who already owns a share. To put it bluntly, they're buying time. They're not earning it.
So the bear case really boils down to these key risks. The financials are just weak and the losses are growing. There's this constant threat that they're just going to keep diluting shareholders, and there's massive execution risk. Scaling a business like this is incredibly hard, and let's not forget they are up against some fierce competition. This is the reality that's keeping that stock price pinned down.
So this is where we land. We have two completely different, totally opposing stories about the very same company. So how in the world do you square this ambitious, exciting dream with such a harsh financial reality?
And this slide just lays it out perfectly. The bull case sees a visionary pioneer. The bear case sees an unprofitable little company that's just burning cash to stay afloat. And the crazy thing is, right now, both of those narratives are true at the same time. This is the fundamental conflict that really defines Sidus Space today.
This quote, which really captures what investors are talking about, just nails it. Operational progress is real, but financial credibility is still lacking. In other words, the market can see they're building things, they're making progress, but they haven't proven they can build a sustainable business yet.
And all of this brings us to what might be the single most important idea for understanding this company. Right now, Sidus is a tech story. It's valued on the promise of what it could become one day. It is not yet a revenue-generating business, which gets valued on the actual profits it's making today. That distinction, that is everything.
And so, we're left with one final, pivotal question. Can Sidus Space make that incredibly difficult leap from being just a tech story to becoming a real revenue-generating business? Because ultimately, the answer to that question is what will decide if this $2 stock ever actually reaches its billion-dollar dream.